The copper markets have been rocked overnight on the back of President Trump's comments that the ongoing investigation into US copper import tariffs under Section 232 of the Trade Expansion Act of 1962 will result in higher than expected tariffs on copper, with the date of implementation possibly sooner than markets had expected. So, what do we know so far? Well, as it stands, following the signing of the executive order into the investigation on US copper tariffs, there have been four major uncertainties centering around when the investigation decision will be announced, what level will the potential tariff be set at if it does come in, will the tariff include any country exemptions for, say, major producing countries like Canada or Chile, and will the investigation also extend to areas like copper scrap exports? Now, as it stands, what we know so far is on the timing for tariffs, Commerce Secretary Howard Lutnick outlined that the levy would be in place in late July or the 1st of August. What level will the tariff be set at if it does come in? Trump has outlined 50%, higher than previous expectations, which ranged from 10 to 25%. On the question of will the tariff include any country exemptions, this has still not been disclosed. And will the investigation also extend to areas like copper scrap exports? Again, this has not been addressed, but we are aware that organizations such as the Copper Development Association have called for tariff exemptions on refined and scrap copper imports, but support tariffs on recyclable, high purity copper scrap exports. Now, looking at what market reactions we've seen, US copper prices posted a record one-day spike on Tuesday, pushing Comex copper to an all-time high before modestly paring some of those gains in morning trading. Meanwhile, LME benchmark prices have come under pressure, falling by 1.9% in morning trading, with the LME 3-month price standing at $9,607 per ton. As a result, we've seen the Comex LME arbitrage jump to over $2,600 per ton. Interestingly, still not fully pricing in the 50% tariff. Now, taking all of this into account, what do these latest developments mean for the copper market and copper prices? Well, ultimately, until there is certainty on the outcome of the investigation, we cannot assume that the latest announcements are solid fact. However, as we see it, the quicker that a tariff ruling is made on copper imports, the quicker we can see a return to normal trade patterns, which will start to ease the extreme scarcity of copper units outside of the US. The higher the tariff level, the sharper the reverse back to normal trade patterns is set to be, given the added expense to ship material into the US. And if no exemptions are made to producing countries like Chile, then again, the faster the reversal of flows to more normal trading patterns. So in a scenario outlined of tariffs coming in sooner than expected, at a higher level, with potentially no country exemptions, then this, in our view, spells out a long-term bearish outlook for LME copper prices, while US copper prices will remain at their elevated level as future supply risks grow, given that the US has a 44% reliance on copper imports for demand. Now, coming to price movements for copper, following the sharp move in time spreads on the LME, with the cash to 3-month spread posting a contango for the first time since late April this morning, we are of the view that copper prices will likely return back towards the $9,000 per ton level in the coming months, with this latest development possibly the nail in the coffin for backwardations, which have been persistent since April. However, we are cautious that the extreme tightness outside of the US will take time to unwind, especially if the investigation does extend for longer than outlined from the time frame of late July to early August.